Sometimes the truth is stranger than fiction. This is a story time. Gather around, kids. I'll tell you a little story from my time as a bookkeeper, as an accountant, and as a county consultant. This is one of the crazier stories that I came across. It has to do with employee embezzlement when someone who works within the company steals money from the company. The main point is check your bank and credit card every day, folks. Uh, for you small business owners out there, no matter how busy you are and no matter how big you get, up to a certain point, of course, I think that you should be checking your bank balances on a regular basis, probably even daily. But let me get into the nitty gritty of the story. So once upon a time, there were a consumer services company with 100 employees. So it's not exactly small, not exactly humongous either, but 100 employees within one office. Hmm. The leadership consisted of the CEO and the COO. These two were probably the founders of the company, I believe, but they were both involved with the day-to-day executive decisions of the company's business. The finance and accounting team, there was a CFO who oversaw this team. There was a controller. There was a finance director. There were a few staff who handled accounts receivables, accounts payables, payroll, etc. And then there was one accounting consultant at the time who did special projects. Yours truly. This is where I fit into the story. My work came to a planned hold. Okay, so we're going to take a break in the special projects that I was working on. That was prearranged, predetermined. So, great. So I went on to work on other things. But one day the CFO called me. Can you come in? We have something for you. Okay, something unexpected. Let's take a look. It turns out there was a huge $250,000, give or take, unpaid balance on the corporate card only used by the CEO and COO. WTF, what the fuck is going on here? Why is there a $250,000 unpaid? How come this wasn't being paid? What happened? It turns out a staff accountant who's in charge of paying the corporate card was paying their own credit card, the same CC company, the same credit card company with the company's bank account. So this is what happened. The CEO and the CEO had their own corporate credit card from American Express. It's a very common thing, especially when it comes to business credit cards. The staff accountant who's in charge of paying the corporate American Express that was used on a regular basis by the CEO and COO decided to start paying her own American Express bills. Do you see where I'm going with this? And by paying her own bills, when you look at a bank statement, all you could see from the payment account, the operating account of the business, is payment to credit card, American Express. It doesn't mention what kind of a credit card, which credit card it is. It just shows just a very vague detail that there was a payment sent to American Express. And so up the chain of command here, the finance director, the controller, the CFO, no one bothered to check, let alone the CEO and COO. No one bothered to check the CEO and COO's American Express account on a regular basis, not even the CEO and the COO themselves. And because how American Express works, they just let you carry the well, how most credit cards work, they just let you, some ways happily so, carry the balance. Some American Express accounts don't allow you to do that, but I mean, if you have a very fancy card, they'll not only let you carry the balance, but they'll take a nice wet bite out of it and show you with bill you with another nice interest charge each month. You carry the balance, right? Uh, yeah, I believe that's how it worked out, but don't quote me on it because I know certain American Express accounts don't allow you to carry the balance. It depends. But anyways, that's not the point. The point here is that embezzlement, fraud, theft, corporate threat, white collar crime to a very somewhat sneaky, somewhat uh, in a guile manner has happened, taken by a young staff accountant. This was completely insane, to the tune of almost a $250,000, I would say. So, I mean, to end that story off, the police were involved. The FBI was involved. Attorneys are involved. Whoop-de-doo. They're pretty sure that person had to face some criminal charges, had to be imprisoned, so on and so forth. But that was a crazy ordeal that I came across firsthand. How to avoid employee embezzlement. This is broad strokes tips here. This is not by any means an exhaustive uh, list of best practices. But first of all, if you're a small business owner, even if you're a bigger company, even if you have 100 employees, uh, I think there needs to be some kind of uh, SOP, standard operating procedure, of checking the bank and credit card balance every day because that is a huge, not only just the bank and credit card, any source of funds, a PayPal account, um, like the line of equity, so to say. Um, and it kind of goes deeper into payroll, and it kind of goes into like more exhaustive and comprehensive internal audit, regular internal audit procedures. But the very first thing it starts off with is to check your bank and credit card balance every day, just to see if it makes sense. The next step is taking a little bit more detailed and comprehensive approaches, a daily one sheet report with expected money in, money out. This is what I've done professionally for part of my career where depending on the size, depending not just on the size of the company, but depending more so on uh the the personality of the decision makers, whether it's a small business owner or whether it's a big uh corporation. Sometimes we have to provide daily. Some people call it daily one sheet report. Some people call it a daily cash report. It's just showing what money has come in and come out recently, and also forecasts or budgets or has expectations of what money should go out, will go out, what money will come in, should come in, and this gives a great uh, sharp view, keen view of the not just a big, broad bird's eye view of what's going on in a month or a quarter or a year, or just that week, that day, even of what's going to be happening. Spot check. This is something that needs to be happening, I think so, with a lot more small businesses. Spot check. Randomly call and check in on a frequently used vendor on payments. Hey, Bob, thanks for finishing off that project the other week. Just want to make sure you're good on payments. Did we pay you? Did you get the check? Did you get the wire okay? Great. Just want to make sure you're okay. All right. We'll check in on you with the next work. Have a great one. That's all you need to do. Make sure that your vendors, your suppliers, the people that are, outside of payroll are okay, that they're getting paid. The people like it's one thing to be like email can be so misleading at times because sometimes instead of like bobsmithcontractor.com, some scammer out there realizes that you're working with this Bob Smith contractor, so they create another domain, bobsmithcontractor.net, and they're invoicing you for money that you just send blindly, and Bob Smith didn't get paid and you lost money, so you need to have it still comes down to a good old phone call. Emails can be a source of misleading information, misleading communication, scam, and fraud and embezzlement, unfortunately. Here's a real big pro tip. Whoever is the in-house bookkeeper slash payment person, have the in-house bookkeeper slash payment person go on vacation and bring an outside consultant come in for internal audit. See, this is it's a natural progression when it comes to bookkeeping, accounting, uh, much with other careers, but a lot of people think, even within the people who work in this line of work, a lot of people think that it's a very stable job, it's a very stable skill set, a very stable career, and thus, if someone works within accounting or finance department, or someone is a bookkeeper for a small business, right? They work there for a year, for 3 years, for 5 years, for 10 years. That is a source of problem because, especially for smaller businesses and all the accounting roles, the payments to vendors, the collections and the accounts receivables from clients and customers, the money in, the money out gets siloed, gets bunched into just one person. One person has all that control, and the owner is just out there doing what they do, drumming up business, making clients happy, making things happen on a regular day-to-day chaotic basis, right? And so a lot of times what I've seen, from what I've read, is that long-term in-house accounting employees and the probability of employee embezzlement, there's such a strong correlation. So when you ask, because it's going to be territorial, but when you bring it up in a way such that, and it has to be careful too, you don't want them to start realizing that you're onto them, and so they start covering their trucks and tracks and get out of town. No, it's like, you know what? We think that you've been working so hard. We're gonna send you on a paid vacation. You know, something a little sly, something a little, under the radar, something a little reasonable, understandable. And all it takes is just one day, maybe even less than one day, to have an outside financial accounting consultant come in and just go through the books and see if there's any kind of sign of impropriety, fraud, embezzlement, theft, white collar crime. Um, so that takes a little bit more nuance, more attention. So you'll need to speak to professionals on that. But I am always at the helm, ready to help. My name is Tommy Kim. I'm a master bookkeeper, Tabular LLC, based here in New York City, Midtown. Thank you for watching. Remember to check your bank and credit card balances every day. Do it. Do it for yourself. Do it for your business. Do it for your family.